The first thing that strikes us is the fact that you are now sitting on a 100% cash portfolio. That's about as bearish as you can get as far as the equity markets are concerned. What is the reason? What is the rationale for completely exiting, the entire equity portfolio?
A very good morning to all the viewers of CNBC TV18. See, I think as Morgan Housel has rightly said, everybody is right in the stock market. You just have to rely on your framework, and the framework should match your psychology. What, as an investor for a very long time, I started investing in 2006. We've been a fund since 1992. What I've realized over the time that whenever a bull run comes, the bull market correction, or particularly a bear run which follows it, a lot of wealth that you've made in a bull run gets depleted. So it's okay, it's okay to take a breather from time to time. It's okay to not be investing in very expensive markets. I think that is the prime rationale, not to be invest. We are all, I believe, investors and not stock market investors alone. And the overall, I think the motive is to grow the capital. And since the markets are expensive, a lot of FOMO factor is there in the market. A lot of investors are now jumping in with expecting the returns that we have seen in the last 1 or rather 2 years. So I believe, very frankly, that gap would not be there, and there is a significant room for downfall from here.
Would you quantify the downside, and what would be the marker for a correction? Because for some time now, a lot of people have been calling out for a correction, but the corrections have been shallow. It's only now in the last 3 months that pretty much a 10% correction has persisted. Till then, it used to be a 5% correction, and the markets would instantly bounce back. What would be, what makes you convinced this time that the correction is going to be, more deep-rooted and broad-based?
See, first of all, Rima, a very good afternoon. And the first point that I believe is the overexposure that the Indian retail investor now has in the market. I have had discussions with a lot of retail investors, particularly from our PMSs, where I see that I was talking on your sister TV show as well, where I was telling them that investor to whom it was difficult to convince to put in 50 lakhs back in July 2022 today has a portfolio of around 10 crores, which is around 90% of their capital into the markets. So a lot of money from new retail investors has come into the market. Apart from these behavioral biases, the valuations are also not supportive. See, the global growth is going for a toss, especially in India. If you see the impact of the US inflation, something is not right with the Indian economy. We are not cutting rates. We did not have an inflation problem, but we are not cutting rates as expected. We are lagging behind the US. And also, I believe that the earning depletion that is happening in the Indian economy is not right. India was particularly going through an old economy run. Old economy run by means either interest rate sensitives go up or these capex sectors go up. This time, since there was no global growth and global inflation under control, so it was a chance of the capex, and we saw a wonderful run in railways, defense infrastructure, and power. But the tide change after the general elections. BJP not getting a majority. We should all, we all know that India was getting a very higher rating as compared to rest of the world. Why? Because everybody believed that India is being run by one of the best business minds out there. This government had tremendous allocation to capex, and it was taken very positively. But as the tides changed after general elections, and now schemes like Ladli Behna, just alone in Maharashtra, it is 46,000 crores of expected outgo. And if this happens, I believe that the derating for the Indian economy is something that can come right now. So just a little bit cautious on the markets. We going in 100% cash does not mean that the markets will, go into the correction mode. We went in September 2021 up till the Russia-Ukraine war broke out in early March 2022. So it is a part of our strategy that whenever we feel that the markets are expensive to exuberant, we go in for cash and take a breather from time to time.
Anirudh, another question that we want to ask you is, now the ongoing correction, what is it that you're finding attractive? Or let's say maybe a few stocks from the sectors you like go down another 5, 7, 10%. What is it, or which sectors would you like?
Okay, just to answer the previous question, I forgot the point with Rima made. If I can quantify it, in Nifty, we are seeing around 8 to 10% correction, but in the small and mid caps, I think it will be 1.5 to 2x of that. So somewhere around, say, 13, 14 to say a 20% correction can also come in the mid and small cap space from the highs that they had achieved. And when it comes to the sectors that we are liking, Of course, I believe that somewhere see the capex theme that has started in India, a lot of consumer names, something like a food delivery and a confectionery delivery company is something we like. There, the airlines are getting getting this airline in India is getting a lot of market share. So, these are the companies that we're liking. Hotel companies are something that we like a lot. So yes, going forward, consumer names are something which are gaining traction. Capital goods again would become when it comes in the valuation game would become very, very attractive for us. Yes, but we are not very, very bullish on, say, on the other side, we're not bullish on autos, we're not bullish on global commodities like metals and all.
And how long will this correction last? Do you mind?
I think there are a lot of events, Rima, that are coming in the next couple of months. We have Mr. Trump coming in, so a lot of drama expected then, and then we have budget. So generally, if you look at the past few years, say the past 15 years, generally, whenever there is confusion, there is an increased amount of volatility, and in that increased amount of volatility comes capitulation in the market, and ultimately leads to a formation of a strong bottom. That is something we believe should happen in the next 2 to 3 months.
Okay, thank you so much for joining us, Anirudh, giving us a sense of markets. You're quite cautious as far as the entire market setup is concerned as well. Thank you so much for sharing your views with us today. Well, with that, it's a wrap on this edition